So we've talked about the ugly. We went in reverse this time. We talked about the ugly first and what that is. We've talked about the bad and what that is. So now let's get to everyone's favorite and the happiest. What is the good when it comes to financial information? So Bruce, tell us what's the good?
The good is your financial statements, which are prepared by your auditor. And that doesn't mean that your financials are audited, but if you go and look at a CPA firm, a big firm that does everything, they will have a tax side and then what they call the audit side. And the audit side prepares your financials that you use at your bank, that they conform to GAAP, generally accepted accounting principles. And they present your business in its very best light. They show your depreciation slower, they show your income a little higher, they help you build your net worth and do all of the things that make your financial work. They do this because the design is to be able to, it's a sales device to me. If you go out and you go to an investor, here's my financials and it says something. You go to someone who is you're buying new product from. Your business needs nuts and bolts, let's say. And you've got somebody, hey, I want the best price on nuts and bolts. Well, how do I know? Here, I'm a good credit. And you can prove these things. And those financials are really what the bank, the investment community, your vendors, and everybody make decisions off of.
Yes, and I agree. As business owners, these are the documents that you're going to be looking at. So I may miss one or two, but the financials are actually your profit and loss statement, your balance sheet, your cash flow, your statement of assets. What am I missing?
Well, when I was working in finance, where I was lending to people, they'd give me a financial, and I'd read the notes, and then I'd go back to the financial. And you should have, a good financial will have all of this information about what the company does, where its loans are, where all the assets are.
It's even a business plan talking about your mission and your vision and the corporate structure, and it's going to have your ideal client and what their values are. So it really truly is a business plan, a financial business plan, all wrapped up in a package to say, look, who are we? Who are we going after? And what's the financial information in our business that would make us attractive as a successful business?
Well, and if you think about it, taxes look backwards. General ledger looks at what's happening right now. And the financial statements look forward. They're a forward-facing document. And that forward-facing document allows you to engage with your vendors, your investors, your customers, all of these people that may need to see the information. And it's stuff that you want to be able to show.
It's the good stuff. That's why we call it the good, because it's showing your business in the best light. And as a business owner, those are the documents that you're really going to be digging into. Yeah, you've got your taxes, you sign at the bottom and you write your check. You've got your daily general ledger that the accounting team should be working on regularly. But this is the document, these are the documents that you're really going to use to make decisions going forward. You've put your plan in place. You know that you're going to have this stream of income coming from this service, and you're going to have the whole piece going. But now you can say, gee, should I invest in this asset or this opportunity? Or should I be looking for income coming in? Or better yet, should I be investing with a bank to get more capital to make it bigger? All of that information is really driven off of these financial documents. And that's where the business owner really gets their hands in and should understand what each of these mean and how to use those with your decisions going forward.
And you should always use separate people to do this.
Agree.
I have a story. I have a client that I've dealt with for 30 years. Family business. There was a small CPA firm, tax guy, audit guy. Audit guy dies. So tax guy is going to do the statements, that does the taxes and says, well, I've got the format of the financials. How hard can it be to do this? And in those financials, he takes all of the depreciation, which was called Section 179, which is specifically a tax code. And he moves all of the depreciation onto the balance sheet and P&L in the financial. And what he did is he created a loss, and he tripped one of the problems the bank laid out for them. And this customer was then pushed off into the bad part of the bank, which was the workout unit, because they didn't make any money, because they lost money. Well, that depreciation number was wrong. And if they had talked to somebody like me, it would have been, well, let's fix this, and I could go explain it to the bank what it was. What happened is they got pushed off, then they went out, and because the bank didn't want to talk to them anymore, they went to a hard money lender. And they spent 4 years with this hard money lender. That cost them almost $850,000.
Right, because good credit and good financials, it's the same thing in the business world. So if your credit is good and you show that your business is profitable, you're going to get lower interest rates, better terms, better insurance, better, everything in your business that you reach out to run is going to be better because your financials are showing good standing and good profitability. And if you're using the bad that you created off your tax time and you're bringing it in, you're going to end up paying higher tax rates, you're going to pay higher interest rates, you're going to get worse coverage on all the insurance programs that you need to have. Workman's comp bases off your financials and your business credit. So, I mean, why would you pay more in your business just on a cash flow basis? Why would you pay more for every single service you need because you didn't line up your financial documents right? And it's the same information, you just didn't lay it out right.
And like this customer that did this, they were also slow to get me involved and move back to a bank. If they had brought me in there, they would have never gotten popped. I would have been able to solve it. If your financial information is correct, it's a big asset to you. Mm-hmm. And is it really that expensive when it cost them $800,000 over 4 years? Is it really that expensive to bring in and do it right? And to be able to, and Marcia is absolutely right. Your insurance company looks at this. Mm-hmm. Your bank looks at this. Your vendors look at this. And I'm going to be willing to take a better risk with a better customer. Think about, I was in the restaurant business. I've done a bunch of restaurants. Terms in the restaurant industry is 15 days. If I laid out a great financial, I got 30 days. That meant I was working longer on their money and shorter on my own. Mm-hmm. So I got 3 turns of sales before I had to pay for something. So that's why you use these financials. And there are 3 different levels to financials, and not everybody needs to do them. The very baseline is compiled. And compiled is the CPA takes all of your information, puts it into their form, puts it into their notes, but it says this is the customer's management's information, and we've arranged it properly. These work 90% of the time for most bank deals. The next level, maybe 80%, the next level is reviewed. And that's where the CPA will take all of your information and they do what's acid test. And they'll test some of the transactions through it. And they'll say, I've reviewed this information, this is exactly what it is. I believe this makes a great showing of what they are. The last one is audit. And audit is very expensive because the audit team literally comes in and goes through every transaction you've done. If you can get to where you're doing good quality compiled or good quality reviewed, that's going to help you borrow money. I very, very rarely see a client that needs audited quality financial statements.
Of course not. I mean, unless you're asking for, more than what your business can produce, 3, 4, 5 times your sales. I guess the real thing is, how often should you be reviewing these financial statements as a business owner? And I think most instances, you should have access to information when you're making your decisions, but at least monthly on some documents, some basic level things.
You should be using a dashboard for monthly.
Yes, for monthly, but then you're not going out and getting financing every single month. You're going out every 3 years or every 5 years or however often you're going to go out and get an inflow of investments or refinancing the investments you have. And that's when you have to have it all perfect and below the audited. But I think the real thing is that these can be really valuable tools in helping you make regular decisions in your business each month, each quarter, when you're making your business run. They don't have to be the full-on
Reports.
that are going to do it. It just really needs to be that information that you understand. So if they're compiled, and they're compiled great the first time, then you're looking at accurate data that you can analyze and make those decisions off of every month. And then when you're going out for the big money, then that's when you come in and you get the beautiful version of it.
Well,
but if it's done right the first time, it's going to be so much less to get them prepared.
Well,
in the future.
the easiest way to do it is settle on compiled.
Right.
Okay. Now, every quarter, have your CPA review that compiled report and give you a new one. They've got to see, they're going to have to put all 12 months together eventually. Isn't it better that every quarter you have a statement?
It's going to make it less money in the long run.
But it also, when you go to talk to your banker and you say, well, here's the CPA prepared for the quarter, they're going to go, look at these guys are on top of things. If you give them a management, it's a good management out of QuickBooks, that'll work. But trust me, it doesn't save you any money to wait a year to do all the work because they're going to do it quarterly anyway.
Right. So stay on top of these, I guess is what we really are recommending, is that you do them on a quarterly basis because you want to use them in your monthly decisions. And if you use the basic level on them, that's going to be fine, and it's going to get you a leg up for when you do need that financing, when you do want to bring on a partner, when you do want to impress a vendor that you want to get good terms on. All of these documents are so essential, and this is really the good part that the business owner wants to focus on. And again, not the daily accounting, definitely not the taxes, write the check and kind of forget about it. But the financial statements for the planning and the future of the business is where you're going to have the most importance.
So we've talked about the three pieces of the financial information: the ugly first, the bad, and now the good. Last question I have for the both of you is, you might have touched on it a little bit earlier, but why do you need three separate professionals for the good, bad, and the ugly in your business?
Well, first off, you wouldn't pay a tax person to do your general ledger. General ledger people are not real expensive. They're the people that manage your general ledger and deal with it. And that is a
data entry.
It's a data entry, then followed up by someone that's an accountant who knows what they're doing. The tax person does taxes. And GAAP says that the person that works your general ledger and does all of the accounting cannot be your third-party reporting. So if your accountant is involved in this and your accountant's involved in the taxes, they really cannot legally go do your financials. And that's why a lot of CPA firms have an accounting group, a tax group, and an audit group. That's staying in complete cohesion with GAAP. And by doing that, they're staying where they want to be. And everybody in that circle is, as she likes to say, the expert in their lane.
Yes. And so when you're thinking about it as a business owner, obviously costs are always important to you, and you're trying to keep costs down. But when it comes to your accounting, oh my gosh, please don't skim and try and find shortcuts and try and do things yourself, or have one guy or one team do the whole thing, because you're just asking for trouble. One organization or one team or one person can't understand the brevity of understanding the data entry and all the tax possible strategies you can have, and then to be able to put you in the most best light so you can bring on partners or get money or create great financial decisions. It's too big of a topic to have just one. So I really recommend going on the low end, have the data entry, have the accountant oversee it, then you have the tax professional that can look backwards, and then the forward-facing strategist that can take you forward to make those decisions. Don't cut your costs on this one. This is not the area to be cheap.
My joke on all of this is the one size fits all.
No.
And somebody that comes to you and says one size fits all and I can make it work. That's like saying, gee, Bruce, we're going to put you in a robe and we're going to put Shaq in the same exact robe. It doesn't work. And that one size fits all, while it sounds great, never quite works. And often it's cheaper to break the pieces apart than have one person do it. And it's cheaper because of the cost of doing it, but it's cheaper because of what those reports do for you also.
And the opportunities that could come out of it. So go for the experts.
And if it costs you, let's use for easy numbers, if it costs you $5,000 a year to just do your financial report, if you're $1 million a year company, is that a big deal? If you're a $10 million a year company. But I know people that I don't need to do financials. I've got tax returns and my general ledger. Just say $5,000. Where's the deal on that?
It doesn't make sense.
Yeah.
It is.
And it's also
it's a business expense that is so important for you to not cut corners on. So
I agree.
Absolutely. Well, I thank you both for being here and extending this conversation out to you all. It's been an absolute pleasure. I've learned so much. I hope all of you tuning into this episode really see the value in both what Marcia and Bruce do. So real quick, Marcia, how can people get in touch with you?
Great. So my company is Bella Financial Group, and please reach out to me. We do complimentary consultations to figure out how we can help you.
My group is Your CFO. My name's Bruce Braviroff, and reach out. Like she just said, you need help, we'll come meet with you for the first time for free.
Yep.
Sometimes you can get both of us.
Ooh, 2 for 1.
2 for 1
Yeah.
special.
Right?
Tell them that Partner Channel OC sent you to get the 2 for 1 special. But cheers to the both of you. Thank you for this.
Thank
You've
you.
heard the good, bad, and ugly with the 3 of us. And if there's anything else we can do for you, please reach out and let us know how we can help you out. Cheers, everybody.
Cheers. Thank you.
Cheers.